Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, December 9th, 2010. Well, folks, same old on Wall Street in terms of what the markets are doing. The markets right now are basically on the flat line. The Dow is down 15 points, Nasdaq up 7, S&P up 3. So just like yesterday, just like the day before, we are seeing a market where it has a little volatility early in the day and then kind of settles in and just floats sideways to up as POMO continues to come in and prop the markets up. And that's what you're seeing, guys. The volume is so light here. We are seeing again a POMO day occur, which is permanent open market operations by the Federal Reserve, where again they buy treasuries from institutions. Institutions again infuse money into the markets to keep them propped up from falling down and again keep the average American spending. Remember, the more the markets stay up at these levels, and the markets right now are up about 20 to 25% from the lows going back 3+ months ago, people look at their 401ks, they look at their IRAs, they look at their investment accounts and say, wow, things must be getting better because I'm, this much richer in that portfolio account. Sure enough, all right, well, I'll go out and spend some more money for Christmas. That money goes into the system. The Fed believes that if people spend enough, it's going to restart that cycle. Now, that's really what got us in this mess in the first place, spending, running up debt. And again, they're thinking it's going to get us out of this mess. I don't see how that's possible, but it's okay. I couldn't care less in the scheme of where I'm trading the market today. In the scheme of where the United States goes, of course I care. But on a day-to-day basis, I'm here to make money, and that's what I'm going to do. So again, good trades today. Fantastic trading environment. The market gaps up. Look at where it gaps to, folks. Right to a double top. 124 double top. Just scan out here from 12.7, which was 2 days ago on Tuesday. The double top exactly gapping up right to that. That's a short signal. Anyone who doesn't think that's a short signal, you need to study your charts, price pattern, and timing again, and your technicals that, again, we teach in the Research Center. But look at the short on that. Look at the fall in the first candle alone. Then it pops back up, then continues to fall. It comes right back in here to gap fill. Gap fill was my long signal to the chat room, again, calling out a long at gap fill. Look at the bounce you get. A beautiful little bounce right there. Right there, the Pierce of gap fill, and look at where it goes. It goes all the way up. That was good for about 20 cents or so on a bounce all the way down to that point. All right, then after we bounced up, we came back in. Where do you go? You go through that gap fill level, and you touch the next level. All right, so does everyone understand the methodology? And again, I can't go into it too much because, in all fairness, it's really for the premium members of the Research Center and the Intraday Stock Chat, so I can't divulge too much. But needless to say, there is no one in the Research Center, no one in the chat room that should be missing this play or doing it wrong. First hit of a trend line right up here, you short. First hit of the trend line gap fill right here, you buy. Then you come down, you hit that same line again. Do you buy it? Absolutely not. It's the second hit. First hits are the best. What do? You wait for the 50 to get hit. You hit the 50, and you buy there. Sure enough, look at the bounce and look at the market since then. It's been a beautiful move to the upside. The spiders are up 43 cents, but again, Dow is negative, S&P and Nasdaq are slightly positive. It's just another float day, another flat day. POMO again pushing the markets up here midday as volume is just minuscule at this point. All right, so again, understand the rules, abide by the rules, and you'll be profitable. It's that simple. Discipline is key in understanding the rules. All right, now let's go over a couple different things. I wanted to quickly cover that. Let's see what the dollar is doing. The dollar again today is up, but barely up. Notice how the markets are spiking up here over the last few minutes. The dollar has fallen all the way back to the flat line, and the UUP, which again is the ETF for the dollar, is hovering on the flat line, and that's why the markets are going up a little bit. The fall on the dollar here, see this move down right here? Take a look. This right here, when the dollar was at the high of the day, it matches up on the time frame perfectly to the SPY, making the low of the day right there. All right. In addition, notice the spiders. The spiders have gone up since then. What's the dollar done? The dollar has fallen since then. Amazing how that works, folks. Please understand the inverse relationship with the dollar. The markets trade inverse to the dollar. They continue to do so, clearly shown on this chart now. All right, what else do we have here? Let's go to the gold chart, the GLD here. The GLD is bouncing. I did talk about this in the nightly video, calling for a possible bounce in the gold chart based on a couple different factors, most of them on the daily chart. I talked about right here. You had good support, the 20 moving average in this trend line. You came down into it in 2 days, a $5 fall on the GLD. What's the likely scenario? The likely scenario is a bounce. Sure enough, you're getting a $1.28 bounce on the GLD. The SLV also, take a look. Big fall here. Again, if you want to do it like this, take a look at this. Just connect these lows, and this is an amazing little feat right here. Connect the recent lows, and look at what you got right here. You hit it right there. What happens? The bounce comes in. So again, just understand trendline analysis and chart analysis and doing this type of thing. And really, honestly, it opens up unforeseen keys to making money in the market. That's how simple it is. It really isn't that complex. I hate to say it, but definitely not complex. Some people make you believe you have to learn these black box trading programs and these algorithmic trading programs. It's nonsense. You can do it all yourself just by understanding some things that the rest of the world doesn't understand, and it's not that hard to understand it. Okay, next up, let's go back to the quickly on the spiders. That's the daily spiders chart. Again, there's your double top on the daily chart. We talked about the double top on an intraday basis, which was a great short today. But what I really want to go into now is a few different plays. Let's talk about some different charts today in regards to some stocks. How about Apple Computer? Apple Computer is down today. It gapped up and then fell right back down. Apple and Amazon have both been having a little bit of a trouble making new highs. The market made a new high, but both of those stocks really haven't been able to at least hold the highs while the market continues to kind of inch up slowly and surely. And that is something that we need to watch. I think a lot of positive was built into Amazon and Apple going into the Black Friday shopping season. They really ran up nicely, especially Amazon. And ever since that's kind of over, it's looking for the next catalyst for more movement to the upside. And I said this, and I'll say it again, but I really stated before Black Friday. I said I think once you get through Black Friday, you could probably short most of the retailers and look for them to pull back. And a lot of that has been true. They've all stalled out, especially Amazon. Amazon, I had called for a possible shorting level above 180. It got to 181 in two different occasions. If you look at the daily chart, one here, one here. Each time it's pulled back below 180. Now it's down about $6 off those highs, and that continues to be the case. And you can see Amazon really struggling up in these levels after such amazing gains recently. All right, now, in all fairness, we have to always keep in mind that most likely the Federal Reserve is not going to allow this market to really tank. The only way it'll happen as a tank in this market would be as if some catastrophe happens in some portion of the world. In Europe, another default, Spain, Italy, or Portugal, or Belgium, one of those countries really gets in trouble. Or you could look at North Korea, South Korea, though that instability there. If something like that happens, then obviously the Fed cannot control it, and you would see a drastic issue occur. But until we see that type of thing happen, the Federal Reserve can keep the volume light in this market and keep the pressure to the upside, or at least on the flat line, so that people will be outspending and the artificial inflated bubble kind of starts to be created again. Okay? What other things? I want to talk about a few smaller charts. I've given you guys PARD. PARD I started talking about in the nightly video to the Research Center subscribers when it was about 37, 38 cents. It's now at 44 to 44 and a half cents today. That's the high. SOMX continues to kind of look good as it continues to push up. Those pharmaceutical companies continue to look very good to me. In addition, one of the other ones I want to mention here is ULU, ULU. Very low end here. This is a very tiny play, and it's trading at about 8.5 cents. A very cheap play, I have to say. I am starting to like it. Look at the chart here. It was as high as 30 cents, and it's come down. I like the double bottom down here as well. Chart-wise, this is a very, very attractive chart. Low end of the chart seems to be low risk. I mean, well, as low risk as a penny stock could be, but it's one that I'm watching at this point, and again, we'll keep an eye on. In addition, RPC, which was a former hidden gem, folks. I gave this as a hidden gem over here, and it ended up running from basically 20, 30 cents all the way to $2.60, one of the biggest hidden gems of all time. And sure enough, since then it's come all the way back down here. Now we're approaching that 20 to 30 cent level again. We're actually trading at 29 cents right now, and it's starting to look semi-attractive. I think it could get down to 20 to 25 cents, so understand it could go to that double bottom. But right in there, it looks like a good risk-reward trade as well, and I figure I just throw out a couple little freebies in these videos to get you guys interested and understand what we do. So not only do we cover small caps, we cover large caps, we cover ETFs, we cover commodities, currencies, and the overall market analysis. Teaching is really important to us as well. Those of you in the nightly video will totally understand that. And again, that's part of the Research Center. I encourage you all to come and join that Research Center. And if you have time intraday, join the chat room. It's fantastic. All right, guys, enough said. Take care. Have a great afternoon. And again, keep your eyes on the market.